The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 10th. Terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right, that one little 2x4 shift means you and I, we can find the gift in every set of circumstance that life is going to throw at us. We're going to go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. I'm absolutely grateful for your presence here today, and I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Thursday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 86 points at 16,339. S&P is up 11 points at 1953. NASDAQ Composite off 40 at 47.96. Russell 2000 is up 6 points. DAX finished its session down 93 points. The FTSE was down 73. Gold's up $8. Light sweet crude up $1.38. Silver is up 7 pennies. Leading the charge, the upside here, dollar-wise, Clovis Oncology, Con-Way Inc. Man, I'm going to have to reboot my system because there's something that's not right here as I take a look at those bottom panels. So we will just simply... We'll just simply skip what's moving to the upside and the downside until I can reboot this during the next breakout there. But there is plenty for us to go take a look at. So, and what I really want to be able to do is take a look at the NQs out here, because I really believe that today it's all about the NQs. So let's step through this one thing at a time. We'll start with the futures contracting. We'll start with a 5-minute chart out here. So here's the 5-minute chart for the NQ. What I want to be able to point out to you is where the real resistance is on a 5-minute basis. And it's this little green horizontal line going across my screen. In fact, if I just simply clean this chart up here, probably should have done that. I'll just turn off all of the other market profiles out here. So we've got the green. We'll just turn off everything just to make it nice and clean for you. Little housekeeping, little chores that we're doing here. And I want you to just pay attention to that top line out there. That top line, in fact, this is what we have on my screen right now is just we're looking at a 5-minute chart, but yet we're looking at the 5-hour market profiles, TAS market profiles out here. You can see pretty well evenly distributed. Our point of control really dead center of the between the low and the high out there. So the key level to be watching inside of the NQ today is going to be 43.05. And we'll actually give it the actual high, which took place here at about 10:50, 10:55. There was 6,500 contracts. That high was 43.0750. If the NQ is able to bust across 43.0750, do with more than 6,500 contracts, you will set up an A to B equals CD to the upside. But that's a 5-minute chart. Otherwise, that's its resistance zone, which is traveling between the 43.05 to 42.40 type area. Over the course of the last hour or so, it's been in a range of 42.73 to this 43.05 level. That's a 5-minute chart. Let's go step up our game. Let's go take a look at the 120-minute time frame chart. Now, in the 120-minute time frame chart, we can see that nice little rising trend line that began forming back on August 24th, right? We saw that one big flush to the downside. That took place at about 8 o'clock in the morning on August 24th. And ever since then, there's been a rising bottoms pattern. There's been, a declining tops pattern as well. So we got a little wedgie that's going on. But right now, what you and I are focused on is the level of support here. So we know we've got a level of support. We also know that we have on a 5-minute basis really that's a 5-hour basis, right? Because we were taking a look at the 5-minute chart, but we're looking at the 5-hour horizontal level out there. And as we said, it's really at the top of these swing points. So if this level is broken, which we said was what, 4307.50. What we are really likely to see then is the NASDAQ get all the way back up to the highs yesterday as the market was opening between that 9:30, right around the 9, well, it was 2 o'clock in the morning here. Yes, actually, it was 2 o'clock in the morning. Yesterday, which is at 43.59.50. Now, that's going to be a real key level to watch. That's assuming that it can break above there. And I'm not saying that it is, but we're going to go take a look at some other metrics here that would say, hey, it's got a really good chance to be able to do that. So we're taking this one step at a time. So we now know, when we take a look at a little bit larger picture here, we also know where support is. So if, in fact, the NQ, let's take a look at the other side of the deal, the other side of the trade, which is if it can close below, let's call it the candle session from this morning around 8 o'clock, 26.50. Then what will happen is, remember, we're using now this blue line, this 43.59 level across the top. Hey, you break support, pretty good chance that you, well, first, the first area that you're going to go target are the prior swing points from September the 1st, and that's in the 41.23 level. But I would say price would come back and actually test the swing point from August 24th out there, the top of which is 4,043. But we're not there right now. What we know is support is holding. We know there's some short-term resistance, and we know the upper of the additional levels above us with regard to resistance as well. So that's what's going on the 120-minute time frame. Let's step over and take a look at the NASDAQ itself, the NASDAQ composite. Let's go ahead and blow that up on our screen. Let's take a look at the price oscillator. And, you know, the market will not crack to the downside until we see the NASDAQ give it up. And that's why we're spending time this morning, right now, or this afternoon, I should say. Of course, it depends on where you're listening to the show, on the NASDAQ, because I do believe that it is critical component as to what the markets want to do today, so we can watch these different levels of support and resistance. If we look under the covers of the NASDAQ, we can see the price oscillator never gave it up yesterday. Never gave it up the day before. Never gave it up the day before. In fact, the last time that we saw the NASDAQ composite price oscillator down below zero was August 26th out here. That got above it on the very next trading session. We saw one session, September the 1st, where we saw price below that. But the very next session, price was above it. It said that the sellers never had control of the NASDAQ out here. Maybe hard for you to believe, but that is the interpretation that's going on out here. And until that price oscillator gets below zero, and then stays below zero with some additional follow-through, then it's the buyers in control of the NASDAQ, and the market won't crater again until we see that level get taken out. Now, today we have not made a higher high inside of the price oscillator, but price-wise, we just have really an inside day going on as well out here. So it's not like, you know, and if I go back to that 5-minute chart, let me do that here. You know, you're going to see that volume, for the most part, if we just simply took a line out here, we'll just simply use a red arrow. You know, we can pretty much see that we've been on a fairly decent decline with regard to volume. So it's not as if this level of resistance that's under attack-ish, 4305, is being undertaken with any kind of accelerating volume to the upside. So it would say to me that that's going to be a pretty stiff area of resistance. Now, back to the summation index, the price oscillators out here. So the NASDAQ looks pretty good. Now, here's the deal. The NASDAQ's pretty strong. We'll go take a look at an individual stock next. I want to do that. We're going to go take a look at Apple. Price oscillator, New York Stock Exchange is above zero. That's your left-hand panel. Right-hand panel is the Dow, which has been the weakest link here. That's price oscillator, just slightly above zero as well. Inside day there. Inside the Dow, it doesn't look like it's an inside day necessarily inside the New York Stock Exchange. These markets are really getting a little difficult to navigate, but we're boiling it down to just the simple things that you and I can take a look at to understand what's going on inside of the markets. Now, if I go back here and take a look at an individual stock inside of the NDX 100, let's take a look at it. So inside the composite, inside the market, let's go take a look at Apple. And Apple's got 38 million shares as we speak right now. 38 million shares, if we just take the straight line math, says that Apple would do somewhere around 70 million shares by the end of the trading session. Now, what's interesting about that, now I don't know if it's going to be the straight line math. I haven't broken down Apple and taken a look at it from the open versus where we're at now. I'm just using where we're trading at about 115, the type of volume. and what we're pushing into, right? We took a look at the NQ pushing into a swing point. We took a look at the composite price oscillator being above zero out here. And now we take a look at Apple, which is actually pushing into its swing point from August 31st. That swing point low, let's actually just go ahead and mark it so you can see that on my chart out here. That's at 112 even Steven. So you're trading at 112.39 as we speak right now. Any close. Let me make this. I'll put this. Oops. Let me put this over here. It'll be a little bit easier for you to see. That way you can get a gauge. So you can see we're doing 38.9 million shares. The swing point here from August 31st is 56 million. And I said, just straight line math, we're going to do about 56 million. So you're pushing into that swing point with no, did I say 70? We're doing about 70 million shares. So Apple, if it on the straight line basis, boy, I probably butchered that. We'll just reverse. Let's take a look at it like this. Here's the deal. Apple is pushing into a swing point with volume if we just look at straight line math out here, because you've got a swing point with 56 million. Run rate says, hey, you might do about 70 million today. That says if Apple closes inside 112, even Steven, it ought to go try to attack the 114.53 level. If you get above 114.53, Apple will make a run to the 117.65 area. Likewise, if you close below 112, it says Apple wants to go back up and test it, assuming that the volume characteristic maintains itself. If, on the other hand, volume just totally lightens up, it flattens out, and Apple closes below 112, you'll have a test of its most recent swing point with light volume. You'll have a failure on price and volume. So that's what we know as of 118. So to me, it's really all about the Qs. If we go back and take a look at those 120-minute time frame charts out here, let's go do this, and let's take a look at what's going on inside the ES Mini. Let's go take a look. In essence, we'll break down the SPY and the and so forth. If we take a look at the ES Mini, you're going to see that also that little rising trend line going back to the August 24th time frame out here, right? And you can see that that level has held. The market profiles that are on my screen right now, those are for the 120-minute time frame. And we can see that if we take a look at those market profiles, take a look at how the top of the box and the point of control, how close they are to each other. That tells us that there's sellers. As far as if we were going to play the game of Stratego in the market inside the ES, you and I would know where we've got the sellers camping out. And they're camping out in between that price range of 1977 and 1982. The ideal sell on the ES, assuming that it doesn't break above, is the 1992.75 area. That has been a level of resistance that is to be sold into. And because you've got a descending trend line as well, take a look at that nice little, this is how things are lining up. And take a look at that descending trend line off of the highs here from August 17th. If the NQs can do, and they're doing all the heavy lifting today, if they can continue to do that heavy lifting, and push the markets up, then you'll want to watch the ES and see how does it handle at 1992 level. Not saying it's going to get there. We just need to take a look at what the markets are doing right here, right now. And we'll be back in about 7 minutes. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. When we went to break, we were beginning to take a look at the ES Mini. I'm going to go ahead and turn all of our market profiles back on. We're back at the 5-minute chart here, so we're going to start at the 5-minute chart. And the resistance level inside of the ES right now should be about 1959. And, it looks to me, we've seen just, again, a 5-minute chart. We're seeing just a tad volume coming in. We're going to at least get a test, or we should get a test of 1955.75. If we get over that level, then the 1959, 1962 area becomes the next target inside of the ES. Just simply taking a look at market profiles out here. If I go back and take a look at the 120-minute time frame, this because the ES was not able to break out the lows this morning, but again, the NQ is doing all the heavy lifting here. I can easily make the case that you get back up into the 1982, 1992, 1986 type area out there, and that's where you'd want to take a look. We're in this narrow trading range out here, but that is the message on the 120-minute time frame chart. Now, if we switch over and we take a look at the ETF structure out here, let's go take a look at the ETF structure for the, did we look at it on the Qs? No, we only looked at Apple. Let's go do the SPY, and then we'll come back to the Qs. Or if we did the Qs, my apology, and I'll just try to, somebody just knocked me upside my head and say, hey, pay attention. Now, if we take a look at the SPY, at least as of 1 o'clock, was going to come in light. Straight line math, it looked like the SPYs are going to do about maybe 140, million shares today, and that 140 is going into 160. But we're not anywhere near the swing point. So quite frankly, the SPY is not providing you or I with any kind of information, right? We don't get any type of information until we actually test the swing point, as we did yesterday. That swing point being August the 28th. 160 million shares. Yesterday, you did 149. You closed back below it. That was a failure on price and volume inside of the SPY out here. So that just really shows us that. And let's go take a look at the Q now, the QQQ series. We only looked at one stock out here. But let's go see what the Qs are doing. And the Qs look like they're going to come in at roughly the same volume, maybe short by 3 million or so out here. And that's a swing point from August 28th. That's got volume of 49 million shares. I show straight line. You can do 46 from here. We'll see how the day ends up. If the Qs, regardless, volume or not, if they close above 104.85, then that says that you go and you test the high out here. That high being the 106 even Steven area. In fact, you could make the case, you got a new market profile yesterday, and it's brand new today. Nonetheless, I would say you could actually get up to 108.46. That says you've got to clear the 106 even Steven level out here. So you got similar type volume. We know that Apple's pushing into its swing point. Looks like with volume, the Q's not too shabby out here. We know the price oscillators are up above zero, and this gives you a good glimmer as to what the markets are doing. We take a look at the summation index, Dow, NASDAQ Composite, New York Stock Exchange, all above zero as of 127. And you and I know that things can change in a heartbeat out here. But let's take a look at what the heart is beating as we take a look at it right now. Now, with regard to the VIX index, not a ton of movement today. It's trading out at 25.50. Here's the daily chart, well above the 50-day exponential moving average at $20.15. Looked like yesterday, maybe at the open there was a chance it was going to try to get down and actually test that level. It did not. And the VIX index, if I take a look at what it's doing and compared to all of the other contracts out here, it's more set up like it should be, where the current contracts priced out at 25, while the cash index, 25.49, and all the other futures contracts are just simply slightly above it. Just the most two current contracts out here, September and October's contracts. Gold. Let's go take a look at Goldilocks. So that gives you a pretty good, all right, I'll tell you what. Somebody just said, I could hear him. Somebody said, well, would you do me a favor? Tell me what's going on with the IWM and the diamond. So I'm going to do that for you. That were those folks that were asking. If we take a look at the IWM out here, see what it's doing, we've got that's pushing into its swing point from August 31st, 29 million shares there. Volume-wise today, the IWM is actually pushing in there with volume. Very interesting, as Artie Johnson would say. So the IWM pushing into the swing point from August 31st. Looks like it's doing it with volume right now. It's done 19 million shares versus 29, so it should be able to. So that would say that the IWM wants to go test the high of 115.98 out there. If it can close above 115.98, do it with volume today. You'd have an A to B equals CD to the upside. Next area of resistance for it, though, 117.65. Now, can I do this in 5 seconds out here? What are the Dow Diamonds doing? Kind of like the S&P 500, not doing much, not even pushing into a swing point. So this is the SPY and the Diamonds against the Qs and the IWM. That's the market as we speak at 129 on September the 10th. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow's up 150, S&P is up 19, Composites up 60, the Russell 2000 up 9 points out there. So nothing there really new from when we began the show and what we've been anticipating. We take a look at, prices pushing into swing points and volume analytics and so forth. So let's go. I actually forgot to shut down my system out here, and let me see if just by selecting son of a gun. And we're in the long segment, too. So with regard to taking a look at some individual stocks, it's going to make it just a tad more difficult than maybe what I would normally do. But I have a request here. It says if I would take a look at the EEM. So let's go do that. That's the Emerging Markets ETF out here. So let's take a look at EEM iShares, Emerging Markets. And I don't know why it's taking, there we go, so long. Peak D in the den. You need to short interest and long, short, intermediate, and long term. Well, what's always great when you trade these ETFs, for me, from my standpoint, for it to make my cup of tea, I really want to know what's inside it. What are the top 10 holdings inside it so I can get a better idea as to what's going on. But let's just take a look at it straight shooter-wise. Let's use what tools we do have out here. And let's start off with long term. So let's go take a look at the monthly chart for the EEM. So we can at least go back and kind of compare this to how we would the other markets out here. Now, in the case of the EEM, we can see really a huge consolidation if we'll call it a consolidation. Right now, it is traded all the way back to the July 2009 level. And that's where last month, when we take a look at a monthly chart, that's what it was able to do. If we just take a look at retracement levels, let's just try to understand from low in November 2008 to a high that was put in here in 2011. You can see it also is coming right back to the 0.618 retracement level. Which was at $30.52. So here's the deal. If the EEM does not hold $30.52, you can expect it to actually get all the way back to its swing point, at least the top of that, which is the trading session from November 2008. And that high is $27.63. Your 0.786 retracement is $25.11 out there. Volume-wise, you're coming into that level with light volume. But the key area to be watching is going to be 27.63. When we look at a monthly chart out here, last month it was pushing volume 1.6 billion shares. It was testing 1.7 billion shares from the trading session of October 1st. That is in 2011. So it held that area, so you were actually pushing into a swing point with light volume. It needs to stay above. It needs to close above 33.42. You're trading right now at 33.47 out here. You close below 33.42 is the monthly chart that we're looking at. Price at least goes back and tests last month's low out there. And that's what the monthly chart is communicating to you and I. Now, this is weird. I've actually, seems like my system, I must have too many other things going on out here, so I have a little bit of a delay. So I might just have to go back to telling jokes. Nah, I didn't do such a good time last time, I don't think. Let's take a look at the weekly chart. And, yeah, there's something wrong here. My system might just reboot automatically, in which case I'll have no choice but to tell you some jokes. So this is wild. This really makes it no fun to do a live technical analysis show when you're just waiting for the data to populate. So hopefully, Peak D, the information I provided to you on the monthly helps us. That is the point, SR. Samson's largest holding in EEM. Boy. Well, this is odd. Let me see if I can get daily data to pop up on my screen. Okay. No, and I'll tell you what, I'm just simply going to go ahead and reboot. I was having trouble before, so now we don't need to save that new page. Just go ahead and reboot. Now, with regard to the EEM, I can fall back to my other system out here, so let's go do that. Let me see if I can pull open one of those charts out here. Give me a moment here while I search for that. So let's go find a daily chart out here. I'm going to restart that back up. That'll take really just a moment. But let's take a look at the daily time frame chart out here as soon as I can find it. Hey, look at that picture there, Mr. Tom O'Brien. So let's take a look at not the UCO, which is the oil ETF. Let me see if this will populate. So we've got the EEM. Let's take a look at the daily chart out here. There we go. Okay. So if we look at the daily chart for the EEM ETF out here, what we can see is right now it's trading on its daily basis in between its market profiles out here. 31.14 is the bottom of the box. 35.11 is the top of the box. So the next area of resistance inside of this ETF is going to be 35.11 on any type of move higher. Let me see how the nope. How about that? That's pretty wild. So it's a good thing they have a backup system, is it not? What I did get a chance to do, though, was go take a look at gold. Oh, that's a rotten shame. Well, I'm just going to have to go to a plan B as we take a look at gold. I have no idea what's going on with the system there, and I'm not in the mood to reboot the whole thing. Let's go take a look at gold on the 120. Peak, I hope that helps answer your question. Well, I didn't do is look at the weekly. Let me look at the weekly for you out here. Let's do this. So we've got this chart system here working. Let's go take a look at a weekly time frame, see if there's anything else that pops up out here. We'll give it a moment. And as we take a look at it, let's take a look at some wave counts to the downside, see where we're at here in that fourth wave to the downside out here as of the week of August 28th. You're still trading inside that bar. So, Peak, this bar here is just really important. Any move to the downside is actually a continuation pattern. It's a falling three, and it can take 5, 6, 7, 8 weeks in order for that pattern to form warm out here. This also shows resistance at about 34.83 as well on the weekly chart. So hopefully that helps you out. Now, let's go take a look at Goldilocks out here. Oh, that's just disgusting to look at my chart like that and see absolutely no data out here. Man, talk about no data. Wow. That's really wild. In any event, it looks like we may be getting data on my other charts. So let's go take a look at the 120-minute time frame here for gold. Gold should be trading right around 1109.40. Maybe someone in the den can just confirm that for me. Let's see. What's the bar? Yeah, we're in the 2 o'clock bar. So it's right around 1109.40. Now, what we saw this morning, this is kind of interesting here as we take a look at the 120-minute time frame chart. Let's take a look at wave counts to the downside off of this high from 10 o'clock in the morning. Now, we're not at a seventh wave move to the downside, I don't believe, in any stretch. Let me try from here as well. No, we're not. Here's what we do have inside of gold. So this is kind of interesting. As gold was moving lower into the 2 o'clock time frame yesterday, what gold was able to do is move lower with less relative weakness. See that little black diagonal line on my screen out here? That was telling us, that was communicating to you and I that gold was moving lower, but it was doing so with less energy behind the move. Now, what it actually did on that bar at 2 p.m. was it created a hammer candle. Hammer candle means that the market is trying to hammer out a bottom. That says the low from yesterday is really important. Now, you also got a bullish engulfing candle on that very next session out here at as we came into the 4 o'clock time frame. And that was telling us that, at least from a short-term standpoint, because you and I were looking at a 120-minute time frame chart out here, that gold had pretty much cemented a bottom for that time frame. And it just simply moved sideways, really all overnight until about, I guess maybe until some kind of report came out. I don't know what report it was. But what we saw, if you take a look at these market profiles out here. Remember, we took a look at it. I remember what the time frame was, but we took a look at one up at resistance where we had the point of control that was close to the support level. Look, we have just the opposite here on the 120-minute time frame. We have the point of control closer to the bottom of the box. That tells us that we've got buyers that are lined up. Remember, we talked about where the sellers were lined up. I believe it was inside the ES Mini when we were taking a look at it, and I believe that was also on a 2-hour time frame, a 2-hour chart out here. Like in this case here, this was telling us that we had the buyers that were lined up. But guess what? Buyers ran right into resistance right at the top of that profile, at the 11-12-90 area. So what are we in when we take a look at gold? We're inside this little trading range out here. Does that mean that the bottom is in, the low is in inside of gold? I don't know. I don't think so, but I don't know to be quite. This is a worthy bottom, but you've gotten everything that you can out of it. The way to answer that question is gold needs to close above 11-12-90 to maybe change the view that we've got more than just a normal bounce that is occurring inside the market. If we go take a look at the, geez, I just might as well turn this sucker off. That's pretty amazing. Seems like it happens right during the show. How about that? I haven't had that happen for a long time out here. Let's take a look at the 5-hour chart. Oh, it's the 5-hour chart that has that seventh wave to the downside. Okay, so like Artie Johnson would say, did we also finish up an A to B equals CD pattern? Let's go check it out up here. Let's go see if we did. No, we didn't. 1094.40 would have been the A to B equals CD to the downside, so we didn't complete that pattern. But what gold did do on the 5-hour time frame, that's coming off of this high from about 2 o'clock in the afternoon. That was on September the 1st. If you start doing the wave counts to the downside out here, what you're going to find is on the 2-hour chart, we saw a hammer candle. We don't have any kind of bullish reversal signal on the 5-hour chart, but what you did do was like going out to the ball game. And we went out to the ball game, and guess what? You got a 7th inning stretch candle. You went all the way down to that G pattern out here. We can see even on the 5-hour chart, though, that price has just simply been contained with inside its TAS market profile as well. So, you know, what does that mean inside gold? It says, yeah, it says, you know what? That hammer candle is important. The low of that, just as getting to a 7th wave inside the 5-hour chart. It says you take that out, and it's curtains for gold. Actually, what it really means is that you're going to go down and at least test the lows. The lows being, looks like all the way back here at about, I'm going to guess, at about the price point of 1072. I don't really need to guess. 1072 is where gold would head to if it busts out these lows here. So that's what's going on inside of the gold contract. If we take a look at, so what do you want to look at next? Because I'm really flying blind. Hey, if you're in the den, go ahead and type something in that I should pull up. I got stuff I can do. What are you talking about? We'll do this out here because people like to get a feel, maybe on a little bit longer term view. Where are we at and what are we doing out here? So let's do this. I almost hesitate to do that. Workspace, open a new workspace. Give me a moment here to try to get something with you, for you. Daily indexes, index, weekly, monthly. Where's my trend out here? I wanted to show you my trend. Monthly equities, market analyzers, long-term trends. I think this is the tab. So give me a moment here for this to populate. And I've also got that little deal that I did on Friday during Tom's workshop out there, and I can always take you through that as well. But just give me a moment here. Here we go. Let's take a moment and take a look at where we're at inside of the Dow. And here's the monthly chart that I'm going to go ahead and put up on my screen out here. Hey, Polar David, thanks for posting a bunch of different symbols in there. Well, I guess it looks like Las Vegas hands. Look, here's what I want to show you with regard to longer term, what it is that you and I are faced with in trying to understand what's going on inside these markets. Now, this happens to be a chart of the Dow, and this is the chart that takes us back into the early 1990s. And what I want you to pay attention to here are these trend lines. The very first thing that I would do is just simply start with these trend lines coming off of the lows here. And what's important to pay attention to is that when those trend lines broke, they simply led to a lower price out here. And that's a trend line that really broke officially off of the 2000 high. It broke back in about August of 2001. The 2007 top that formed, that trend line broke back in June of 2008. What we can see as we speak right now is that trend line is what is under attack. This is either a great buying opportunity because you've come back to the trend line, or we are just simply anticipating that because we're still in the unfavorable seasonal cycle, that trend line is going to break, that we're going to see it close below that level in September. Now, I suggest that it needs to be September in order for that to occur. So it's really important. The reason I say that is because the market typically makes a bottom in October. And I've got one roadmap that says that that's exactly what's going to take place this time, is you're going to see a bottom that forms in October, a nice little Santa Claus rally, which, folks, it begins in October. Doesn't begin around Thanksgiving or what other people think of out here. It begins in October. And if the Dow is unable to close below this trend line in September, I guess what I anticipate is the following, which is in October, it's not going to break that trend. It might go dip below it, but it won't break it and bust it and close below that level. But if we do get a close below that level, and there's other signals that suggest that we should at some point in time, the question is when. If we take a look at counts, we just took a look at that seventh inning stretch candle to the downside on the 5-hour chart for gold. Take a look at the top out here in 2000, a G, a seventh inning, 2007, a G, and guess where we're at in 2015, a G. Take a look at those price relative strength divergent patterns out there. We looked at that on the 120-minute chart for gold. Now we've got it at the highs. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up about 163. The NASDAQ's up about 57. And I am flying blind here for the next 4 minutes. Let's go take a look at, let's go back and take a look at some of the intraday charts here for the futures contract. That's going to be the easiest way for me to close out the rest of this show out here. So if we take a look at where we're at inside of the market right now, let's come and let's go ahead and take a look at our wave counts here to the upside market profile. So we can see on the NQ chart. Remember, we talked about the power inside of the NQ, the NASDAQ. Right now, it looks like the NQ is trading at about 43.22. I'm assuming that I'm still actually getting the data feed, but I'm not seeing anything even move. No, I'm not getting a data feed. Oh, that's a real bummer. That's a real bummer because I hate to try to give you data, so what the markets are doing and have... that is so strange. Okay. Oh, man, now I just lost everything. Hey, folks, I really apologize for that. So what I'm going to do here is I'm going to try to power up my PowerPoint. That's going to be the easiest thing for me to do to try to fill in the next 3 minutes out here. See if I can do that. So, back to, I'm going to just have to start here. Slideshow right from this current slide. Okay, so let's just try to do this. Now finish this off here. If we take a look at the, this is just a blank chart of the Dow going back to 1994. If we just simply add those trend lines in, that's what we were taking a look at as we were doing that last segment here. So that trend line is really important. Again, it's just the Dow right now that we're taking a look at. And we want to take a look at similarities. And the similarities, if we take a look at what the market is doing. So as of last Friday, here's where we were at inside the market. If you take a look at the 82-year average directional cycle. Now that 82-year cycle says that the market goes down into the early to middle of October timeframe out there. So that being said, if you back up here, it says there's a pretty good chance that in the month of September that we're going to actually see a trend line breakout here. That's what we should see. Better if it takes place in September, we close below it, then that has more negative meanings, in my opinion, once we break that trend, versus where here in October, the typical October pattern is to make a decent bottom and move up into the, well, actually it says move up into January. I don't believe that that's what's going to be the case this time around. But if we take a look at other topping patterns inside the markets, it's when prices move higher with less relative strength out there, just like bottoming type patterns. Again, always stay inside your time frame. We looked at gold on the 120-minute time frame. You trade gold on the 120-minute time frame as it was making a lower low with less relative weakness out here. So we've got those same type of topping patterns that were in place in 2007, 2000, and now in 2015. If we take a look at one of the moving average sets that I like to look at, 8 and 13, we're very close to seeing a crossover there. In the past, when we've seen a crossover of those two moving averages, price has moved to the downside. If we take a look at those wave counts to the upside, we've got G singing in the key of G. Stevie Wonder. Of course, you're wondering how in the heck am I even doing this out here because I don't have any data. It's because this is coming from my presentation, little presentation that I did last week out here. But nonetheless, singing in the key of G to the upside, that says that's a significant topping pattern that is out here. Here is the analog. So this is the secret out here. The markets are following along. If you take a look at 2007, price relative strength divergent pattern in the key of G, trend line is under attack. The interesting thing is the Dow topped right around October 11, 2007. Our market, May 19, 2007. That's the two beginning points here. And the market's really just following along with this analog. So, folks, that is it for the day. I hope that tomorrow the system is all working well. Stay tuned. David White will be up next. I'll see you on Fantastic Friday, folks. Take care.
The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar Sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
You're watching Tiger TV.